By the end of this month, the crypto world is about to witness some groundbreaking changes that could reshape the entire landscape. Are you prepared for what's coming next? In today's video, we'll dive deep into why everything is on the verge of a major shift and what it means for you as an investor or crypto enthusiast. But that's not all. Stay tuned as we also feature exclusive clips from Brad Garlinghouse where he raises critical warnings about the events that lie ahead. Could this be the moment that changes everything we know about stablecoins and market regulations? Welcome to MMO Crypto, the channel where we bring you the latest insights, trends, and updates in the cryptocurrency world. If you're new here, make sure to stick around, and by the end of this video, we're confident you'll see the value of subscribing for more essential updates. Now, let's start by taking a closer look at some of the pivotal events that have shaped this year so far. Rewind to March. This was when Tether USDT, one of the biggest names in stablecoins, faced a significant blow as it was delisted from the OKX exchange for EU users. But this was just the beginning of a larger trend. What does this mean for the future of Tether, and how will it impact the broader stablecoin market? Let's explore. This wasn't an isolated case. The ripple effects were felt almost immediately. Following the delisting of USDT from OKX, Uphold quickly followed suit, announcing its decision to stop supporting USDT and 5 additional stablecoins before July 1st, all citing the need to comply with MAA regulations. But here's where things get even more interesting. Other major exchanges, including Kraken, hinted at making similar moves. Is this the beginning of a widespread shift away from non-compliant stablecoins? Looking ahead to 2025, we are standing on the brink of what many predict will be a transformative year for global cryptocurrency regulations. With less than 2 weeks to go, the question remains, how will the industry adapt to these sweeping changes? The stakes couldn't be higher. A pro-crypto administration in the US is paving the way for groundbreaking regulatory frameworks, not just domestically, but globally as well. The big question is, which stablecoins and exchanges will rise to the challenge and thrive in this new era of heightened scrutiny? As the countdown to 2025 begins, the crypto landscape is gearing up for what could be one of the most defining moments in its history. Stay tuned, because the developments over the next few months will be critical in shaping the future of this space. This year, the topic of MAA has been at the forefront of my research and analysis, and for good reason. Why? Because I believe it holds the key to unlocking a wave of accelerated regulatory progress across the globe, a wave that could fundamentally reshape the crypto industry as we know it. If you're wondering how this will affect stablecoins like Tether, USDT, you're not alone. The implications are massive, and the clock is ticking. On December 12th, Coinbase dropped a bombshell. The platform announced its plans to delist USDT in Europe. This move sent ripples across the crypto community, raising questions about the future of Tether's role in the market. While Coinbase has left the door open for a potential re-enablement, it comes with a significant caveat. USDT must achieve full compliance with MAA regulations. But here's the critical question. Can Tether, with its controversial history and ongoing scrutiny, meet these rigorous standards? Personally, I remain highly skeptical. Tether's track record on compliance and transparency has raised red flags time and time again. Achieving MAA compliance would be a monumental task for any stablecoin, let alone one that has faced so many challenges in proving its reserves and regulatory standing. So, where does this leave us? Are we witnessing the beginning of a market shift, where compliant stablecoins like RLUSD or USDC could take the lead? Stay with me as we unpack the broader implications of these developments. The answers might surprise you. Tether has a history of issues concerning transparency and compliance. One of the most notable incidents was in 2021 when Tether and Bitfinex agreed to pay an $18.5 million fine and were banned from doing business in New York after being accused of misrepresenting their financial reserves. These challenges create a significant opening for stablecoins like Ripple's RLUSD. Brad Garlinghouse has repeatedly warned that Tether is not untouchable and could face a significant decline in market share. Discussing the stablecoin market, Brad Garlinghouse brought attention to its staggering growth potential. Currently valued between $150 billion and $200 billion, the market is forecasted to expand by 10 to 20 times in the coming years. Imagine that. What we're seeing now could be just the tip of the iceberg. But here's the big question. Which players will lead the charge in this explosive growth, and who might struggle to keep up? One significant point Brad emphasized is the unique position of Tether, which operates outside U.S. jurisdiction. While this has allowed Tether to dominate much of the market for years, it also places the company under the watchful eye of U.S. regulators, who are increasingly focused on asserting control over any entity representing the U.S. dollar. Could this scrutiny spell trouble for Tether, especially as new compliance-driven competitors like RLUSD and USDC begin to rise? The stakes are incredibly high. As regulators tighten their grip and the market continues its meteoric rise, the question isn't just how big the stablecoin sector will get, but who will dominate it. Will Tether adapt to these new pressures, or will we see a changing of the guard with compliant players taking the lead? The answers will define the future of stablecoins and the broader crypto market. Stay tuned, because this is one story you won't want to miss. Ripple is on the verge of something massive, a potential game-changing breakthrough in the stablecoin market. But what's driving this momentum, and why should you pay attention? The answer lies in Europe's impending MAA regulations, set to take full effect at the end of December. These new rules are not just another set of guidelines, they're a seismic shift that will demand absolute compliance from every crypto asset service provider operating within the EU. This raises critical questions. Is the stablecoin market ready for such strict oversight? More importantly, how will major players like Tether, with its history of regulatory scrutiny, navigate this tightening noose? These regulations aren't just theoretical. They're already creating immense pressure on Tether to either adapt or risk losing its foothold in one of the most lucrative markets globally. For Ripple, however, this could be the perfect storm. With its transparent and compliance-first approach, Ripple seems uniquely positioned to capitalize on this shift. Could we be witnessing the dawn of a new stablecoin leader in the EU, one that sets the standard for regulatory alignment? Stay tuned, because what happens next could redefine the future of stablecoins and the entire crypto industry. In a recent interview, Brad Garlinghouse shed light on Ripple's ambitious plans for RLUSD, a stablecoin that could redefine the market. But why is RLUSD such a big deal, and what gives Ripple the edge to dominate this highly competitive space? The answer lies not just in its potential, but in Ripple's proven track record of integrating stablecoins into its payment flows for years. This isn't a sudden pivot. It's a calculated move based on experience, strategy, and a vision for the future. Ripple's approach is backed by a robust balance sheet and an unwavering commitment to transparency, two factors that set it apart from many of its competitors. In fact, this strong financial foundation allows Ripple to innovate and scale in ways that others simply cannot. Could RLUSD be the stablecoin that sets a new benchmark for compliance, trust, and usability? What's even more compelling is Ripple's broader vision. With stablecoins already playing a significant role in its payment flows, Ripple isn't just dipping its toes into this market. It's laying the groundwork to dominate it. Is RLUSD poised to become the stablecoin of choice in an era where transparency and compliance are non-negotiable? Stick around, because this could mark a turning point in the evolution of digital payments. The upcoming milestone on December 30th marks a pivotal moment in the world of cryptocurrency. This is the day when MAA regulations officially come into effect, and it's not just another regulatory update. It's a game changer. But what does this mean for the stablecoin market as we know it? Could this be the moment that reshapes the competitive landscape, forcing non-compliant players to either adapt or fall behind? These regulations are set to act as a powerful catalyst, challenging stablecoins like Tether that have long operated under scrutiny for their lack of compliance. With the spotlight now firmly on regulatory adherence, stablecoins such as RLUSD and USDC, which prioritize transparency and alignment with legal standards, are poised to gain a significant edge. The question is, how will Tether, a longtime dominant player, navigate this increasing pressure? Will it manage to adjust and retain its market share, or will it cede ground to more compliant competitors? As the clock ticks down to December 30th, the stakes couldn't be higher, and the outcomes will undoubtedly shape the future of the stablecoin market. Are we on the brink of witnessing a major shift in power? Let's explore what this means for the industry and for investors like you. As the stablecoin market hurdles toward an anticipated $200 billion valuation in 2024, the dynamics of this rapidly evolving sector are becoming crystal clear. The question on everyone's mind is, who will emerge as the dominant players in this booming market? While Tether has long held a commanding position, the tide is shifting in favor of regulated stablecoins like USDC and RLUSD, which are strategically poised to seize a growing share of the market. What makes this shift so significant? Ripple, in particular, stands out with its unparalleled advantages: transparency, robust compliance, and a well-established relationship with regulators. These factors aren't just differentiators, they are critical tools for success in a market increasingly defined by scrutiny and accountability. The big question is, can Tether maintain its foothold, or will it lose ground to competitors who have embraced regulation as an opportunity rather than a challenge? With Ripple leading the charge, armed with RLUSD and a reputation for innovation, it's clear that the stablecoin race is heating up. The stage is set for a battle of giants. Who will come out on top? Stay tuned, because the answer could reshape the future of digital finance. In conclusion, the stablecoin industry stands on the brink of monumental change. The landscape is evolving rapidly, with new regulations and market dynamics challenging the status quo and opening doors for fresh opportunities. Ripple, with its strategic focus on compliance, transparency, and innovation, is uniquely positioned to capitalize on these shifts. As RLUSD gains traction and regulatory frameworks like MAA reshape the market, Ripple is poised to emerge as a key player, potentially redefining the future of stablecoins and digital payments. The next few months will be critical, not just for Ripple but for the entire stablecoin ecosystem. Will established players like Tether adapt to the increasing demands for regulation, or will they lose ground to competitors who are better prepared to navigate this new era? The answers will shape the trajectory of the cryptocurrency world for years to come. If you found this video insightful and want to stay ahead of the curve, don't forget to like, subscribe, and turn on notifications so you never miss an update. We're here to keep you informed with the latest developments in the crypto industry. Thank you for watching, and we'll see you in the next video. Stay tuned for more exciting insights and updates.